Hi everyone, welcome back to Corporate Decoder, the place where we look under the hood of corporate reports to see what's really going on. And let me tell you, after looking at this filing from New Era Energy and Digital, you might just need a power nap because this report is a wild ride through growth potential and some serious financial tightropes. So New Era Energy and Digital, which used to be called New Era Helium Inc., is putting out a big filing. They're talking about selling a lot of stock, a staggering 2.3 billion shares, plus another 5.7 million shares from warrants. This is a massive amount of stock, and it tells us they're looking to raise a ton of money or let a lot of existing shareholders cash out. It's essentially a pathway for a huge chunk of their company to become publicly traded. They filed this with the SEC, the United States Securities and Exchange Commission, which is the government body that makes sure companies are honest and clear with investors. This document is supposed to give potential investors all the important information before they decide to buy. Now let's dive into the numbers. In the 3 months ending June 2025, their total revenue was about $29,000. That might sound small, but compared to the previous year's 3 months ending June 2024, when they only had about $20,000 in revenue, that's a huge jump, almost a 27% increase. This jump is mainly because they sold more natural gas and got better prices for it. However, their expenses are also going up. For those same 3 months, their lease operating expenses, which are cost to run their properties, went from around $225,000 to $308,000, to 37% increase. And then there's the general and administrative expenses, the costs of running the company itself. These jumped significantly from about $1.4 million in the 6 months ending June 2024 to $3.4 million in the same period in 2025. That's a 94% increase, and it's driven by things like higher insurance costs and fees related to being a public company. All these rising costs are eating into their profits. They reported a loss from operations of about $1.8 million in the 3 months ending June 2025, which is worse than the $1.5 million loss in the same period last year. It seems like even as their revenue grows, their costs are growing faster, pushing them deeper into the red. A big reason for these losses is the interest they're paying on their debt. In the 3 months ending June 2025, their interest expense was a whopping $1.5 million, a massive jump from just $79,000 the year before. This tells us they've taken on a lot more debt, and the cost of that debt is becoming a major burden. Ultimately, this all leads to a net loss. For the 3 months ending June 2025, their net loss was over $3.6 million, significantly worse than the just over $1 million loss in the previous year. It shows that despite revenue growth, the company is struggling to become profitable. The company itself acknowledges this, stating in their risk factors that they have a short operating history, which makes it hard to predict their future. They're also building a processing plant, the Pecos Slow plant, and there's no guarantee it will be finished on time or be profitable. They could even run out of money, raising doubts about whether they can continue as a going concern. And here's a particularly worrying detail. Back in March of 2025, they received a notice from the Nasdaq stock market saying their market value of listed securities was too low to stay listed. They have a deadline to fix this, and if they don't, their stock could be delisted. This is a serious red flag for investors. Now let's look at how they're trying to fund all this. They have this thing called an Equity Purchase Facility Agreement, or EPFA, with a company called ATWAI LLC. Basically, New Era can ask ATWAI LLC to buy their stock up to $1 billion worth. However, the price they sell it at can be as low as 95% of the market price. This is called a discount facility, and while it provides access to cash, it can also significantly dilute existing shareholders and drive down the stock price. They've already sold over 12 million shares under this agreement, raising over $8 million. They also have convertible notes, meaning they've borrowed money that can be turned into stock. They owe ATWAI LLC millions on these notes, and the interest rates are high, going up to 18% if they default. These notes are secured by pretty much everything the company owns, which is a major risk for any future lenders or investors. Looking at who owns the company, E. Will Gray II, the CEO, is a significant shareholder through a company called Pecos Slope Holdings LLC. Joel Solis, the former chairman, also holds a substantial number of shares. These key figures have a lot riding on the company's success. The filing also details who the selling shareholders are, which includes entities like ATWAI Infrastructure 2 LLC and ATWAI Infrastructure under this filing. The sheer number of shares they might sell, over 2.3 billion, could really flood the market if they all decide to sell, potentially driving the stock price down significantly, even if the company's business operations are going well. It's important to note that many of these stock issuances and debt agreements happened without being officially registered with the SEC, initially relying on exemptions. This is common for early stage companies, but it adds another layer of complexity and potential risk for investors trying to understand the full picture. Now let's put on our Warren Buffett hat and look at the bigger picture. New Era Energy and Digital is playing in the very competitive helium market. Helium is a crucial element for many high-tech industries, from MRIs to semiconductors, and there have been supply shortages which has driven up prices. This creates an opportunity. However, the company is currently burning through a lot of cash, as shown by their increasing net losses and significant interest expenses. Their reliance on these equity purchase facilities and convertible notes, which often come with unfavorable terms, like discounted stock sales or high interest rates, suggests they might be struggling to secure trust facilities, and convertible notes, which often come with unfavorable terms, like discounted stock sales or high interest rates, suggest they might be struggling to secure traditional financing. The fact that they're not making money and even facing potential delisting from Nasdaq is a major concern. While their revenue is growing, it's not keeping pace with their ballooning expenses and debt. Their strategy to move from hydrocarbons to a helium-focused model is sound in theory, given market demand, but their ability to execute this strategy successfully, especially with their current financial pressures and operational challenges like the Payco slope plant construction, remains highly uncertain. The substantial number of shares being offered by Co slope plant construction remains highly uncertain. The substantial number of shares being offered by selling shareholders could also make it difficult for the stock price to gain much traction. And shares being offered by selling shareholders could also make it difficult for the stock price to gain much traction. So what's my take? New Era Energy and Digital has a lot of potential with the helium market's demand, but they are facing very significant financial and operational hurdles. The company is burning through cash at an alarming rate, and the risks outlined in their filing are substantial. Investors should be extremely cautious and understand that this is a high-risk, potentially high-reward situation. They need to see successful plant operations, improved cost management, and a clearer path to profitability before this looks like a safe bet. Alright, that's our deep dive into New Era Energy and Digital's latest filing. What are your thoughts on their strategy and financial health? Let me know in the comments below. If you found this breakdown helpful, please give this video a thumbs up. And of course, hit that subscribe button and notification bell so you don't miss our future corporate investigations. Also, don't forget to join our Discord community linked in the description for more real-time insights and discussions. Thanks for watching Corporate Decoder, and we'll see you next time.